Management Accounting 9C, Special Orders, Target Price, Make versus Buy Decisions. This is Ken Boyd, the owner of St. Louis Test Preparation. Here's our Facebook page, our email and website. The book Cost Accounting for Dummies that I teach in a free online course that's ongoing almost every week. Let's go to what is really a combination of three different concepts. The first is a special order. There's a few assumptions in special order that we need to cover first. And first is there's an assumption that you have excess capacity available to manufacture a special order when it comes in. The next is that fixed costs are excluded from your cost calculation for a special order because it's assumed that those costs are covered with other production in the period that you've already completed. The only costs you do incur when pricing your special order are incremental costs. That is, those costs that change the costs you incur when you fill the order. So here's a basic example. Let's assume that your job's normal production run includes these costs. You have some fixed costs, you have some variable costs, and then you have an indirect cost allocation for product design. And remember that indirect costs cannot be traced directly to the product. And that's $3,000. And then somebody raises their hand and wants to place a special order over and above your normal production, and you have excess capacity. The special order production will be for the same number of units. The indirect cost allocation shouldn't occur because for the special order you're hiring an outside firm to do product design for the special order at $5,000. And so the question is, what costs should be included to compute the minimum acceptable price for the special order? At a minimum, what would you have to charge? And the assumption is you've got to charge enough to cover your incremental costs. And in this case, the incremental costs are your variable costs and the outside design firm costs, which would be the $30,000 variable plus the outside firm production cost, product design cost, of $5,000. You got to cover at least $35,000 in costs and include that in the price of the special order. Plus, you'd have to figure out a reasonable profit for you. Let's switch gears and talk about an example on target price, which is the flip side of the special order question we just did. Target price, by definition, is the price to cover all your costs and generate a desired level of profit. So here's a question. Let's assume you have budgeted sales of 300 units a year, and you've identified total costs of $500,000 for your product. In order to get a 10% profit margin, what would your target price have to be? This is a little tougher than it looks, at least I thought. And so I divided it into three steps. The first is you realize that profit plus cost equals sales. So if your profit is 10% of sales, you can do a little algebra to find out that your cost is the sales 100% in blue, less profit 10% in green, which gives you a 90% cost. So for every dollar you sell, it costs you 90 cents. Step two is use the total cost that you were given in the question of $500,000. Divide that by 90%, which is what you just figured out in step one, and you're going to get A in blue divided by B in green. You're going to get your total sales in dollars, 555,556. So now I know my total sales in dollars. And the last step is if I take my total sales in dollars and I divide that over the units that I wanted to sell, I would have to charge about $18.51 for each unit to have this much in sales, to cover this much in cost, and generate a 10% profit. The last one here is a make versus buy decision. And remember, when a make versus buy decision comes up, that your fixed costs and possibly some other specified costs, and there's one in this question, will remain even if you go outside and purchase the product from somebody else. Variable costs are eliminated if the product is purchased from somebody else. So in this example, we have this list of costs. Direct materials. We have material handling, which happens to be 10% of the direct material cost, or 100. Direct labor. Variable overhead, which happens to be 100%, 120% of the direct labor cost, so I multiplied it direct labor by 1.2 to get 120%, or $3,600. And fixed manufacturing overhead of $700. So I add that all up and I see that my total manufacturing costs right now are $8,400. A supplier offers to sell you the product for $8,000. Now on the surface it looks like you're saving $400. Why not buy it from the outside supplier? But there's a few twists. The first one is that your material handling costs are still incurred if you buy the product. So we're going to assume that that $100 remains even though you're not paying for material. And that's possible that there's still some processing and handling that you need to do with a product even if you're buying it from somebody else and not making it. So the question is, should you continue to make the product or should you buy it from a supplier? It's a make versus buy decision. And here's the solution. So here's the purchase price to buy the product, $8,000. Direct material, direct labor, and variable overhead all go away. But the question indicated that material handling stays $100. And that fixed cost stays also $700. Maybe that fixed manufacturing overhead is a lease payment on a factory where you produce, where even if you make the product somewhere else, you still write that check for the lease costs, and so that doesn't go away. So if you buy the product, it's actually more expensive at $8,800 than if you continue making it. So the decision here is to continue to make the product. And the reason you're better off still making it is even though the variable costs go away, the purchase price plus the material handling and the fixed manufacturing overhead makes you worse off, so you should continue to make the product because it's less expensive. That's the end of Management Accounting 9C. Remember that all of the YouTube videos are now linked to the website, stltest.net. For one-on-one tutoring live chat sessions, there is the website. The book Cost Accounting for Dummies, I'm doing a free online course that will be almost every week, and you can go to the website and see the details. Thanks very much, and we'll see you next time.